CFO Brent. How you doing this morning?
I am having an excellent day so far.
Uh-oh, can't hear Brent.
Nope, we can't have
Hey,
Brent.
Oh,
here I am.
there
I'm
he
here,
is.
and I'm doing great. To answer your question, thanks for asking. How you doing this morning? How are you boys doing? All of you out there in Benzinga land.
Doing
Joe,
all right, Brent.
Joe, I see you. Don't act like you're hiding behind
I'm
your
over
chair
here.
over
I'm
there.
over here. I'm not trying to hide. No,
Okay,
no.
okay, just making
He's
sure.
his usual grumpy self,
I'm
All
here
right.
too, boys. I'm here too.
Oh,
Pretty,
Dennis Dick. Good morning.
pretty
So
excited here this morning.
why?
Why is
Why?
that?
Yeah, why?
I don't really know why, actually. I just feel like today's going to be a good day. Ever wake up, on one of those days, and you're like, today is going to be a good day.
I
You ever get
like that attitude.
I wake up and smile every day, and then I come to work, and Joel walks in and turns all the lights on.
Well, you can't work. You can trade in the dark. You can't work in the dark. But Dennis, what's going on with the markets today?
We got a little rally on our hands. We sold off a bit overnight, got down as much as 4 points, down to 17.75, but we have reversed course and we are rallying. We're up almost 5 points here now. We are trading on the high of the day right now, 17.84 and a half. What's technical saying there, Joel?
We're getting up towards Tuesday's close. That's a minor resistance level at 75, 80 and a quarter. You really don't have any major resistance until you get into the 1790 handle. Coming back on the downside, they got within a couple points of Wednesday's low, 74.50. Got to 75.75. I just use the close as a swing number. If we break down below 79.75, we might head south a little bit. But it was the Fed. The Fed spooked the market, huh?
Yeah, we had a little bit of a sell-off. And what were the minutes? Does anybody have the actual language from the minutes there yesterday? Anybody got that handy? So I know we were selling off pretty good after the minutes. I didn't see what the actual language was saying. Do. Maybe we don't have that handy.
They said.
Let me look into it. I'll see. I'll roll over
All
to
right.
one of the other terminals.
Shaky Jake, I'll go find that out. But anyways, here we are getting some of those gains back here today, trading up at 1784. But what about gold there yesterday, Joel? Holy cow, that was an early morning sell-off, I tell you.
It did. It wasn't the later day that gold sold off here. It was kind of hanging up there. What you did have is you broke through a double bottom, Dennis. The old double bottom technical formations. I've been pounding that into your head for years here. Had a double bottom at the 1268, 1269 level. And when was that exact sell-off here? You're right. It was right around noon, and it broke through that level, cascaded down to 1240, and now what gold will characteristically do, get a day or two of consolidation, and then drop another $40.
That probably, I don't know if that's going to happen there. It's a little bit bearish scenario here, but I'll tell you, it does not look good here on the charts here. We are now, obviously we've had the big rally from back there in, when was the big sell-off there, Joe? Back in like July? I think it was July where we really were cascading down hard. And then we rallied in August, we rallied in September, slight sell-off in October, following through, and now we are just getting dangerously close to those July lows. We're not that far off.
Where was it where you said that the gold miners were going out of business? Was
Oh,
it
yeah.
right? Was it right here?
Gold miners are going out of.
Was it?
I just said it's possible that Barrett could see single digits here if it follows the Alcoa lead, and it didn't. Obviously, at that point in time, I think Barrett was 16. It did get down to 14, but then obviously had the huge rally after that, got out back up to 21. But here we are. Look at the Barrett chart. Bring up ABX because
Okay.
this has had. You want to talk about breakdown stocks? This has had massive consolidation just above 18. Started breaking down 2 days ago, kind of hung out, and then yesterday the bottom just caved in. And what do you think of this chart on the Barrick?
As it's coming up here, I mean, this stock is just. I mean, what's going to be the driver here for these gold stocks to get them the rally?
That's what I say.
You know, it's. Let's see if we breaking it down here. Well, we haven't got to the lows of the move yet here. 1730 trading up 12 cents. I mean, on the weekly chart, you do have some support around the $17 level. You got the 1696 yesterday. I mean, it's kind of been in a since making that low in July, though, it kind of has been in a range between 17 and 20, kind of coming out towards the lower end of the range there. But I don't know, with gold cascading down here, I really can't get a feel for this chart as far as where to be where to pick an entry on the long side. Of course, if you're trying it for a swing trade here, I mean, you could always try it at the $17 level, and then, if you have to let it go, I mean, the lows of the move were 1343, 1373.
I don't see anything in the 16 handle. That's what I don't see. And we touched into it yesterday, so we get below yesterday's low of 1696, and it's not looking good. Obviously, going to trade off whatever the whatever the precious metal is actually doing, and that's what it's following. But this chart just does not look good to me. And some of these other miners, the charts don't look good here either. Gold Corp looks like it's breaking down. Actually, GG is very near its 52-week low here, but it is in a massive support area. That 2320 area, absolutely huge. We got down on October 15th to 2322. Yesterday, we got down to 2320. So there is the potential on Gold Corp that a double bottom could be in place. But we start taking out, say, $23. That double bottom is gone, and it does not look pretty.
It doesn't seem like the old rules really apply anymore with gold, because sometimes when you used to get good sell, well, we don't sell off in the market anymore, but like yesterday you had a pretty good break. I mean, I guess gold did recover a little bit during that, but it's strange. All the old rules don't seem to work anymore.
Couple earnings here, stocks to talk about. GMCR reported last night, and what a crazy range this stock had. Joel will grab the range, but I think it got up to like 68.5 and then was down like 50. And it's basically a 10-point range after hours. The numbers were good. 89 cents versus 75 cents, 1.05 billion versus 966 million. The guidance, though, a little bit light. I think that's what spooked the market a little bit. Janney Capital upgrading the stock this morning, so they're not as spooked as the market was last night. And it is trading back up $3.50 here now, but it was wild trading after hours last night.
Yeah, spike up to over 68 here. I mean, what a bar there. It got over 68 to, let me get the exact high here, 68.75. Reversal of fortune took it down to 58.39. But since hitting that 58.39, they've just kind of been a steady climb. Starting to consolidate, find some resistance here at the $66 level. Trying to look at the charts here from a daily perspective. Do have a little bit of a rally. You do have former resistance here at the $65 level. We are trading above that. So I think as long as we hold 65, that was actually 65 was almost the exact highs that you go back to October 21st and 22nd, couple highs there. I think above 65, you're still good to go. 66, another nice round number, but above the 66 here, things open up to 67.37. But I don't know.
What was the after hours high there again?
68.75.
Holy cow, man. They get excited sometimes, those people.
And if you're drawing trend lines here, you kind of can go, woo, way off here, drawing it down, drawing it down, drawing it down. Oh, breakout here if you go on the trend line theory.
Target breaking down this morning. It's down almost $3, actually $2.60 now. Earnings missed 55 cents on an adjusted basis versus 64 cents. 17.26 billion versus 17.37 billion. So actually a miss on the top, miss on the bottom. And Target here is trading down, the $2.60. Closed 66.49, just ticked 63.90.
Got a low though. We are, even though it's down 259, you are bouncing off the 63.40 level. We just hit that a few minutes ago. That's probably as the earnings were released here. Since hitting that 63.40 level, you got to bounce up to 64.50. These retailers, it seems like it's either all or nothing with these things, and it's obviously nothing here. Let's look at the daily charts. Looking at the daily, look at that. Look at all those lows, Dennis. At 63, you had a low at 63.50. A few other in that area, 63.60, 63.70. That's what we've hit in the pre-market. I use that as a support point. Below that, you got the $63, 63.08.
Maybe you can make the chart there a little bigger, the whole screen, Joel. It's just not taking up the entire screen. So you want to adjust that for a second. Yeah, I think it could be a little bigger, actually. On the left side of your screen, we're not seeing the whole chart there. So
how's that? Is that better?
Well, a little delay there, so we'll be able to tell here in a second. Dollar Tree, though, down $3.37 here, 58 cents versus 60 cents. 1.88 billion versus 1.91 billion. So Dollar Tree too misses on the top, misses on the bottom. It's not a good day for the retailers here because everybody that I've got on my sheet here missed, and the retailers are trading down despite the market trading higher here again. And Dollar Tree really weak here this morning.
That's DL, right? Those
DLTR.
Yeah, let's take a look at this stock. Haven't been following the dollar stores here very closely. Let's look at it on the daily chart here. Whew, that's a big drop here, Dennis. We got down what to 55.05 here in the pre-market, and getting a little bounce up to 55.40. This is a big breakdown on the support. You did have that major support at the $58 level. So if it ever gets back to there, you can keep an eye on that. Looking at this stock is kind of just gapped around here. Had a low at 55.20, 55.35 on September 16th. Kind of what we hit in the pre-market, and still some more gaps to fill in that issue. So keeping an eye on the pre-market low. It's right around that 55.40 area. We'll use that as a minor support point.
A couple of these other dollar stores seem to be having a little bit of a sympathy move here this morning. Dollar General, which is symbol DG, also FDO, which is Family Dollar. Both those stocks trading down about 50 cents to $1 here. Start with the DG on this one, and it put in multiple tops. I'm looking at this DG chart. 59.5 was like a wall up there. Obviously, we're now significantly getting away from that area here, and actually DG just took $57. So it's not a pretty day for this one either.
He had a low under 57 on November 8th at 56.81, so coming into a possible support point there. Below that, we're looking under 56.50. You had a low, major support another $1 away here at 56 and change. 55.96 actually was your low on October 9th.
And when I'm treating these things as sympathy plays, sometimes and look at the Family Dollar one, bring that one up to FDO. It's only down 65 cents here. Sometimes what you'll see is these things are pretty illiquid off the bat, and not surprising, sometimes they can almost get up there to being, flat sometimes. And that's when I would look to initiate a short if I was leaning that way. Especially with the weak earnings, they start taking out the settlement price. That's why I start to get nervous on the sympathy plays, though. So just kind of how I approach these stocks, from a sympathy perspective, is when they're down $1.50, $2 in the sympathy, I kind of just sit back on my hands. But if they start to drift up, or if they start to spike up, an early trade, and they can give you a shot to get it off close to settlement, sometimes those trades can work out pretty well.
Did have a cluster of lows in Family Dollar here. You actually had exact double bottom at 69.79 Tuesday and Wednesday, so that's going to be a potential resistance area. And what you're talking about, I saw yesterday in Twitter. It got the downgrade from somebody, and I looked to see if it could get anything off near settlement, and I looked, and it hit the settlement exactly to the tick, and then just pulled back.
Yeah, and that's a big number. And why is that such a big number? Because there's always that closing print is rather large. A lot of participants are in on the closing print. You got a lot of institutions in on the closing print. So that just means there's a lot of participants that are priced from that closing print. And when that happens and it comes back in, if the stock was down or downgraded, somebody that bought the close might be like, oh, if I can get back up there to scratch, it's that whole loss aversion mentality. If I could get back up there to scratch, I'll sell my stock. And that's why sometimes, settlement can act as resistance for the stock too. So a lot of times when I see a stock downgrade, it starts getting close to settlement for whatever reason, it's just chopping around. It can often give you an opportunity to put on a short. It doesn't always work. Sometimes these things can reverse and actually go up on downgrades. We've seen that too. But for the most part, usually when a stock's downgraded, it usually is good for 2 or 3% to the downside there. And if you can get it off a little cheaper, sometimes it's a pretty good edge there. Also reporting this morning, Sears Holdings. Do they ever report good earnings? SHLD stock reported and lost $5. I mean, this stock
Ugh,
just loses money,
that's
man.
huge money, man. How can they
But
stay in business
I've
with
been
that?
saying that forever, though, and it's still staying. Well, I guess they've already went under once. This was the reorg stock, so I guess it's a lot easier when your debt's all reorganized and you don't hardly have any. But Sears Holdings lost $5.03. Supposed to only lose 470. Missed on the revenue too, 8.3 billion versus 8.39 billion. The stock hasn't had any trades here this morning. It's offered at $59 right now, which would be down $2.70. That offer has been there pretty much all morning from what or at least probably about 7 o'clock this morning. So it looks like it is going to indeed open down. The best bid is down at 57.11. So looks like somewhere between 57 and 59 this puppy might open.
Yeah,
Eddie Lampert, if you're listening out there, Dennis doesn't mean it. He's sorry.
I'm sorry. I'm sorry. Yeah, I'm sorry that the stock just doesn't make money.
kind of had a nice run up from the $55 level to 65, and now just kind of roosting in between here, right at the $60 level where it looks to open. I do see a minor support point here at 58.82. That was the low on the 12th, and below that you're looking at a low on the previous day at 58.82. Just got a quick question here coming out of the chat room in VJet. See if we can our news desk adds a ADR. I know Dennis doesn't like those ADRs, but is that really a chart from yesterday? Did this thing really drop like that?
Yeah, just straight down, Joel. It's like $60 opened at and lost down all the way down to $39. What was the news yesterday? I can go try to grab it here too, but
Holy mackerel!
maybe the Benzinga news desk is probably all over
It
it.
was a Citron report. Womp womp.
Negative Citron report.
Yep, that's right.
And basically falling another 6% here this morning. Down trading at 36.70 right now after closing at 39.21. This thing is just an absolute disaster, man. That is crazy that the stock can do that, go from 60 to 39 on that negative report.
Right, and trading down again here in the pre-market, getting a trading down another $2.50 as you mentioned, Dennis. You made a low in the pre-market at 34.70, getting a little bit of a bounce here. I do see a couple lows here in the 32 area, 32.35 and 32.39. We're talking a lot about retail earnings, Dennis, and wild day yesterday in J.C. Penney. So what do you have a big move like that? Wasn't great earnings. The stock made a nice move. I mean, it's kind of the day after earnings that are kind of key here. What are you looking for in? I know you're not a big fan of this retailer here, but what are you looking at for this stock? Is it starting to catch your interest?
Hey guys, real quick on that Voxeljet, I did just want to mention that there was a Citi analyst out this morning that seemed to be defending the name. He said that he believes concerns are already priced into shares. That was on VJet. Just a heads up.
And a lot of times what you'll see here, just to stick with the VJet, and then we will come back to the JC Penney, but a lot of times what you do see, and we saw it with Tesla, we saw different things, where you have that huge down move, you have follow through the next morning, and then eventually catches a bid and actually closes positive. I don't know if that's going to happen here. This thing's almost like going to the casino right now, so very difficult to trade. As a professional trader, I will tell you, professional traders are taught to not trade stuff like this because this is like gambling. Pros don't want to gamble. We want to have more setups. We want to have, better edges. It's hard to really get an edge in something like this, and it is kind of like gambling. But that being said, there will be some vicious rally here eventually, probably because there's probably some people that are sitting on some pretty massive profits, especially if you were short this thing. There's also some people sitting on some massive losses too. But that move was pretty much straight down. There was no bounce in that thing. It was a 60 and just kept drifting down, drifting down, drifting down. It wasn't really choppy. It was just kind of straight down yesterday. But going back to your J.C. Penney, Joel, I've got a number written down here on the stock right now, and I know the close is 944. The high yesterday was 963, but there's an institution selling 339,000 at 962 in the book. So I've already got that number written down there. That it's probably going to run into trouble in the high 950s as it approaches that settlement price and that big institutional order. And is Joel still
In
kicking around?
that area coincides with the 967 high that you had on September 27th. So big area you identified. That's a big order for that stock. We'll keep an eye on that. I guess if it can break above and take that order out here, you might make a run at the $10 level. Brian Sazi, our retail analyst, was just kind of puzzled by those numbers as far as why the stock rallied. And Brent made a comment that they're really banking on a big holiday season here. I think maybe Jakey made that comment. On the downside, if you're trying to pick up this thing and you want to be patient on it, you can maybe wait till it comes back down to the $9 level. You had an 896 high and you gapped up above there, so you only have a 20 cent gap. So over the next couple days, if this doesn't drift back towards that $9 level and fill the gap, I think it might get some momentum to the upside.
Abercrombie and Fitch also reporting. You love these apparel retailers, don't you there, Joel? $34 is trading at right now after closing at $34.99. The earnings actually were 52 cents versus 45, so that wasn't bad. Revenue slightly beat one, or actually slightly missed, 1.03 billion versus 1.06 billion. Guidance kind of lower though, $1.40 to $1.50 for the full year. Estimates were up at $1.48, so they're more to the lower end here. The stock was consolidating a lot before the report, but it is breaking down here this morning.
Haven't they like pre-announced that they? I mean, does it what they? I think that they did back here. I mean, it's constantly bad news coming out of this thing.
It's been a perennial underperformer.
Yeah, pre-market low 33.75, and since you hit that, you got to bounce up close to the $35 level, 34.90. So those are some early levels to follow here. Kind of steady climb. I think this is that big down day was a pre-announcements, and now you're coming back down. Interestingly, 33.95 and 34.06 was a double bottom for the two out for November 13th and 14th, so we'll keep an eye on that as possible support here. Coming back to the upside, you got to get back. Interesting, that thing closed right on the low of the day yesterday, 98.99. Obviously, someone didn't want to be in ahead of these earnings.
The Gap will report earnings here tonight, GPS. Stock was kind of weak and has found some major resistance up here in the 42 area. Had a pretty weak day yesterday, closed near the lows, 41.24. There's a lot of air below here, and I know going higher, there's resistance up here at 42. What are your thoughts here going to this earnings report tonight?
Ooh, boy, oh boy, oh boy. That is interesting. You had that gap. That was probably on same store sales, huh? Oh boy. Well, looking at it from a daily perspective here, I don't know if with the way all these retailers are announcing, I don't know if I'd want to be holding this thing into earnings.
Yeah.
Someone's now targeting the $42 area. You had a 41.91 high yesterday, 42.11 on the previous day. So I don't know. I think I'd try and wiggle if I was long this thing. I'd try and wiggle out at 42. Major resistance above that. Tested 42.50 a few times, but have 42 level. I'd keep an eye on that. It's resistance, and if you're worried about it cascading down ahead of earnings, you got a couple lows in the $41 area. So 41.22, 41.34 were the lows from yesterday. Another low of 41.10. So kind of bounce around between, I think, 41 and 42 today.
A couple downgrades to talk about here. SJ Smucker just had a horrible day yesterday off of their earnings. SJM, the stock was down $7. Actually went under $100 there. Your pair traders who were watching the Campbells and stuff, and not saying it's related, but still canned foods and stuff, kind of related. So if you would have been shorting SJM off of those Campbells, you'd have been making a lot of money, because SJM reported a terrible quarter too. It is getting downgraded here by JP Morgan. Just for you guys to understand, though, once you have a huge down move like that and you get a downgrade coming up the next day, it's not necessarily going to knock another 3 or 5% off the price, because it's already, kind of been priced in from the bad earnings report. Everybody's already leaning that way. So a downgrade can push it down a little bit more, but often you do see these ones reverse. I like more of the ones that have consolidated. If I'm playing the downgrades and stuff, I usually like a consolidation and then a downgrade, as opposed to just, this whipsaw, because obviously the range yesterday was huge too. We were 99.47, 104.44, so I had like a 5-point range. I do think you'll find support in the triple digit 100 area again.
Right, 99.47 was yesterday's low. If you go back a little longer term on this, I mean, 100 was like a rock in this thing. Looking at, let's go to the weeklies here to get that perspective. You bounced off 100 several times going back in June and
Yep.
July. So that's the key level. You got under it in the pre-market or in yesterday's trading. Now
Yep.
you get a bounce above that. We'll see if that level can hold. And so it gapped down on the earnings, and just it was one of those scenarios where it didn't recover.
And then you got Philip Morris here too. Same type of story. They reported. Was it a report yesterday, Philip Morris? I think they reported yesterday. Didn't they? I gotta go check my sheets. I'm already forgetting. I'm getting old because I'm already forgetting yesterday. But anyways, Philip Morris was down enormous yesterday. Basically, had made like a triple top up there in the 92 area. Huge down day for it yesterday. It is getting downgraded here again today by Goldman Sachs. Removed from the conviction buy list. I'm in love with this one because actually it was trading down last night, and I didn't see anything on the report, and I actually bought some stock last night after hours, and then this morning, actually last night around 10 o'clock, I see that it gets announced that Goldman Sachs has downgraded the stock, so I'm not sure if somebody's, what's going
Yeah,
on there.
yeah.
Funny business. But anyways, not too pleased here because I'm actually stuck long, just a couple, not a lot of stock here, but I was nibbling on some long.
Okay, let's look at the pre-market trading here in Philip Morris. Wow, that's a big move for that stock. I mean, it usually has pretty tight ranges here.
It's a
Made
Goldman
a
Sachs downgrade, though. Like, I'm
Yeah,
not surprised. I was down another dollar. I've actually been trying to wiggle it out of here pre-market, but it's been a tough go.
right. You had multiple lows in this issue at the 88.80 area, 88.60, 88 area. You've broken down on that in the pre-market now with a big thick stock like this. You can use that as resistance. Coming back on this downside here, you have a slippery slope below those lows here. It actually had a very uncharacteristic major rally day going back in October. So under this level, boy, it's tough to call it. It's a big move for Philip Morris overnight, but do see some lows in the 87 handle. You have a low at 87.69, another low at 87.29, but this is one of your thick stocks, so I just don't. I mean, I think you might get a little bit of a bounce on this one.
Yeah, I don't know if it's got a lot more gas than being down a dollar here, especially after the big down move yesterday.
Dennis, that you're not getting old. Don't worry. It wasn't earnings. It was just some guidance. They were also speaking at a Morgan Stanley conference, and there was a
Okay.
comment about entering the e-cig market that I think really hit the stock. I think that's kind of where you got that
Okay. Well, I knew
that
it had a big down
lower.
move for some reason. I didn't remember talking about it yesterday, but
Yeah, it's
wow.
kind of funny though. You see a headline like that and you think, okay, this should be a good thing. Well, the market didn't like it. I guess I am assuming that they kind of view it as Philip Morris International stepping outside of their comfort zone. Sort
Mm,
of going into a new market. Um, but I did just have some breaking data. I wanted to get you guys initial jobless claims for November 16th, 323,000. That was a little lower than expected. Economists were at 335,000. Also, just out was PPI for October. That was down 0.2%. That was in line. Core PPI month over month was up 0.2%. That was a little better than expected. Economists were looking for a 0.1% gain. PPI year over year was up 0.3%, and then that core number year over year was up 1.4%.
Let's talk about some of these high flyers here, Joel. Let's start with Facebook here, which I know you've been trying to play it through that breakdown area. It just will not seem to go through that whole 45, 80 area. It obviously was higher than that yesterday, stayed up there all day, but did actually go up to 47.55 and closed kind of weak near the lows of 46.31. But we're getting a pop here on Facebook again up to 46.97. It's up another 55 cents.
Right. What I noticed yesterday as the market was selling off hard, that just came down to basically the settlement and just wouldn't go down. So kind of had a feeling that was going to hold. I mean, you got to respect this major support area. It's probably going to move up again today. Yesterday's high I'd use as a minor resistance point. Yesterday's high was 47.55. Above that, things get up after that up to 48.84. So 47.55 is the next resistance point here for Facebook. Also, I've noticed a lot of that. A lot of the activity off the open is pretty critical for the stock.
Tesla here also trading up slightly in the pre-market, and it quietly is putting a triple bottom here. 119.61 the low 3 days ago, 119.22 the low 2 days ago, and 119.06 the low yesterday. I'm going to call that area a triple bottom. If we go back in July, we were putting in lows in the 119 handle too. So the 119 handle becoming absolutely enormous for the stock to hold.
So what do you think? Is it time to get a little bit dirty here in this stock and try and pick a bottom here? I mean, you are a couple bucks away.
It's been working in Facebook. I mean, you see these things, and usually these triple bottoms set up, and often they break through it, but they haven't been in some of the high flyers. So, I mean, it's been working. You have a reference point there, and that's all you really need with the trading is to have a reference point. I mean, it starts trading 118. It didn't hold, and I'd get out. But, if it's holding that 119, maybe you do take a shot at it. It's down in the 119 handle again today. 3 times, it's found buyers there. Maybe it finds it a fourth.
What about like I know the weeklies. I should probably buy next week's 125 calls because they'll kind of pin it on a number like 120 or 125 today. But coming on the upside here, two highs between 127.45 and 129. So kind of a tight range. Really almost identical ranges over the last 2 days. So keep an eye if it gets above that 129.30 level. I think, or 129 even. Got some room to run up into the 135 handle. And quick, Joe just has a question here on the desk. Do you think the Dow is going to close over 16,000 today? And I don't think so. It's 100 points away. I don't think we got a 100-point rally in us today. What about you, Dennis?
I don't even know where the Dow is. I do not follow the Dow as an index. It's obviously only the 30 companies that make up that number. Whenever I get the Dow mentioned, I always like to go on a rant on it. A very, very poorly structured index. It's a price-weighted index, meaning stocks that have a higher price have a higher weight in the index. There's only 30 companies representing it. It's just not a gauge of the overall market. What really is a gauge of the overall market is the S&P futures. So if you're watching the Dow, for indicators in the market, one thing, I think you should learn to do is look at the S&P futures instead. That's why we don't talk about the Dow futures. We don't talk about the Dow on the show just because it's a poorly constructed index. Everybody likes to talk about it, though, because it's the big number. 16,000 has all the history and the tradition behind it all. And the media likes to say the Dow was up 100 points because it's boring to say the S&P futures were up 15 points. It sounds boring. 100 points sounds cool. So that's why the media focuses on that. But professionals focus on the S&P futures.
Right, the Dow could kick somebody out, put somebody back in, and
they do that.
Yeah.
2-3 companies change, and the whole index has changed. I mean, 2-3 companies coming out of the S&P, there's still 497 other companies there, so you're not changing it. And it's also market cap weighted, the S&P. It's weighted so much better, and so they use the market caps of the different stocks to get the weightings, as opposed to the price of the shares, which is pretty much meaningless. So, yeah, so that's my rant.
I wonder where the Dow would really be like if you took back and a lot of those companies.
Kodak in there, and
Eastern Kodak, and what were some of the other those puppies? I mean, haven't they kicked out and brought in Bank America and AIG? Wasn't that in it for a while?
Yeah, they were there, and Sears, I believe, back in the day was in there too, wasn't it? I think so. It's had a lot of different components in it, obviously, making up those 30 companies. Theirs would be a cool thing to see, if we research what did the Dow look like 30 years ago? What companies were in there and what companies are in there today? Maybe a Benzinga News Desk could hunt that down for tomorrow's show, and we could just analyze how different that index is and how it's all different companies now. I mean, the S&P would have a lot of different companies too, because they usually change it 3 or 4 companies a year or two. So over the course of 20 years, it's definitely going to be different. But, those 30 companies, they change. 8:38 here, Joel. What are your thoughts here, though, just on the crude market? Because we haven't touched it for a couple of days.
Yeah.
We are trading up 40 cents here. I always come in, I say, crude's usually down 40 cents. Well, we're actually up 40 cents today.
Look at that sleepy chart there. Look at that thing. I mean, yeah. What do they say? Never sell a sleeping market here. Multiple. Look at this $93 level. I mean, that thing has been defended on multiple occasions here. We've had a low at the move at 93.16 is what we made a low, and then a couple times we've come down there, and we got to 93.22 one day, 93 and a quarter yesterday, 93.47, 93.48. This kind of reminds me of like a Facebook chart here, the way it just keeps bouncing off that support. So if you're looking for a swing, and crude has done this before, but usually when it makes that double, triple, quadruple bottom, it usually, bolts out of there. And it's not. So if you're trying this for a swing trade, let's say 94.23 is where it's trading right now. You're risking a point down to that level 93.16. Coming back on the upside. 94.48 was your high yesterday. That's a minor resistance point. But if you're looking to buy this on strength and on a breakout here, three highs between 95.08 and 95.20. That because basically crude is traded in, look at this, a $2 range for 6 days. It's got to move here. Maybe instead of trying to pick a bottom here, maybe throw a strangle on here. But this wicked consolidation in crude, it's got to end. And since we're talking
It'll
about
probably end Monday.
yeah, Monday after the weeklies. I haven't looked at the
Yeah.
weekly futures yet, but since we're talking about crude, we got a question here out of the chat room on ExxonMobil, and I gotta give you kudos on this one, Dennis. You nailed it yesterday. All-time high at 96.12, and just ran into a seller at the $96 level.
Yeah,
Yeah.
you know what? I was kicking myself after I saw it open up at 95.75, and that's the one thing. Maybe I should get more automated. I do some automation, but maybe not enough. And you can't be in more than one place, or more than a few places at once as a human trader. But I didn't get this one short, and I wish I would have been short it. Obviously, 95, 94, 99, those sub pennies. But 95, 95 was the high. And it just reversed course. So it opened up, went up a little bit, and just reversed and started tanking for the majority of the day. Obviously lost over $1 by the end of the day with the Fed minutes and everything. But there's this major resistance up there in the high 95s. Like we said before, we go back to, I got to go. To July, we were up there. But if you go back in the monthlies and you look at 2007, 2008, we had multiple highs in the 96 area. So there's no doubt the first time up there, it's going to be tough.
And in the all-time high at 96.12, was there an institutional seller there at the $96 level, or was just good old people using technical analysis and trying to wiggle out ahead of that 96.12?
I gotta think there was somebody there. I didn't see anything in the book, but I mean that doesn't mean there's not somebody hidden there or some big institution just using an algorithm to feed stock out there too. Because when you see a setup when it touches 96, yesterday goes to 95, 95, day before 95, 79. So it's just telling me somebody wants the hell out under 96, just under the all-time high 96.12. So they're probably still kicking around. You get that thing back up in the mid 95s, high 95s, it probably finds sellers again. And that's all trading is. It's about, those setups and looking at areas where there will be potential for big money to probably, initiate sell or to sell stock. And if you're selling ahead of that big money, sometimes you can make some money.
Also, this thing has just it was the Warren boost there from 93 to 96. That's when he had the disclosure on the 13F here. That thing, I mean, it did have a big run up ahead of it, but a 4 point move followed by another 3 point move for this stodgy thing. I mean, you look at this thing back in October, and it was trading within a point range here. That's when Warren was loading the boat, and so now you got the consolidation. Perhaps wait for it to fill the gap a little bit from the Warren news. 93 still got a gap to fill from 94.03 to 93.42. Yesterday's low was 94.37. Also, you got to figure sellers are going to be coming off that $96 level now. Let's look. The highest close. I did notice this yesterday too. You had two closes, 95.42 and 95.45 on Monday and Tuesday. And besides looking at highs and lows, I know we talk about them a lot on the show. We also like to, a couple closes in one area is significant as well.
Procter and Gamble, if you want to talk about these resistance areas too that are kicking up at resistance, Procter and Gamble's the same story. Got some guy at the point, $85. It's just trying to dump stock. 3 out of the last 4 days, we've topped out in the 84.90s. We did get up there again yesterday, just under at 84.98. So again, these big whole numbers coming into play. And I mean, there's multiple reasons for that. It's a strike, $85. It's also just never been up there before. So, there's institutions just say, that are sitting GTC out, their orders out there and get me out. And we know when stocks, are cascading through handles, they struggle at the whole number sometimes. And it's struggling here at the 85. When eventually it does take it out, which like Johnson & Johnson did yesterday, it took out that $95 yesterday. Then it can try to cascade up the next half or whole number. But Procter & Gamble has been really struggling here at 85. Although I don't know, it might get a running start out today.
Do you ever send GMTFO orders?
get me the blank out. Is that what? Did I guess right?
Yep. You got that one right.
No
No.
matter what, those are usually when the capitulation's bottom right there.
Dennis, you've identified the resistance in Procter and Gamble. You have 3 or 4 highs between 84.92 and 84.98. Well, look at the downside. Look at the 4 lows between 84.16 and 84.24. That was another thing I thought, yesterday it already made 3 lows in that area. I thought for sure it was going to take it out. So we'll see. The SPOOs are trading up a little bit. That's trading down a little bit. I mean, what is it? What do we call like a quadruple bottom and what quintuple bottom? Is that,
Quintuple? Yeah.
is that it? And then we figured
think
out
so.
6 and 7 a few other times here.
Sextuple, I think it is.
That's what it was. That's what it was.
Septuple, octuple. I don't know what 9 is. Anybody know what a 9 is?
We'll have to. Joe does. Joe, Mr. Encyclopedia
I
Brown
bet
over
you
there.
10's decable though.
Okay, yeah, there you go. They teach you
we
teach you
just
well
gotta
in
find out
Canada.
9 and we can do the whole thing.
One other question here on the high flyers, and we've hardly have talked about this stock at all, but Apple. I mean, trading in a
It's been boring.
Tw- yeah,
That's why we haven't been talking about it. It's been boring.
12-point range, 15-point range here over the last 8, 10, 12 sessions. Closed kind of weak. Looking at the major support at 512.38, 512.59. I can't remember who we had on, and I think it was maybe Nick Shaheen when he was talking about credit spreads, or I can't remember who it was, but he kind of just felt that there was like you kind of had like a built-in protection here with Mr. Icon on this position and the stock buyback. It just seems like they hit this thing. It doesn't it doesn't go very far, and just going back, really long term, we can go back long term. Remember that 520 area that just held up for forever on the weekly charts, and interestingly, you had the break down to 380. Now you're coming back to that 520 level.
Yeah.
What do you think? You think this little run in Apple's over here?
I don't know. I think it's going to take a headline to get it going one way or another, or maybe an icon tweet or something, but it needs something to get it going. I think it's going to be range bound until we do see some major headline coming out, either on a product or an update or something there. Like, we know Apple, and you analyze from a fundamental perspective, and over half of their revenues come from the iPhone. So, eventually you can milk that thing and you can keep milking it, but eventually you need to find some other, revenue sources here. And
It's not a growth stock anymore.
It isn't. It's what it is. It's a cash cow right now, and that's what it's trading like, and that's why it's trading with a multiple of 8 or 9 or whatever the multiple is, because it's not a growth stock. It's just basically making money off the iPhone, and they need obviously a new product. We've talked about the Apple TV before. We've talked about different things. There's potential things in the pipeline. If they ever do get the Apple TV kicking, it could be a good product, but I don't know. I don't know what, if they don't come up with something soon, the stock's going to start drifting down again. So we need to get some update or some idea generation going there for the stock to really, catch fire again.
Technical formation, you've had since that hit that 529.28 low, you've had 4 consecutive higher lows. So don't get too excited until that trend is broken. We're going to go ahead,
Actually,
Dennis.
one of our listeners requesting a technical on MetLife, MET. I know some of these. I know I had a big reversal day there yesterday. Actually was trading up pretty strong early, opened near the highs, and then just died. It literally was up there at like, I think it was like up at 53, over 53 early in the morning. Just turned around and died. Found some support at 52 and a
Ooh,
quarter.
look at that,
Tried to
Dennis.
rally and then died again down to 52. So you have this whole kill it, rally a little bit, kill it again yesterday chart. I don't know if that's going to continue here or not, but I tell you, it needs to hold yesterday's low of 51. What was it, 51.80 or
Yeah.
51.96? Because we start getting down through 51.89, which was 2 days ago, and 51.96.
Ooh, look at
There's
that.
air below.
Oh, Air Hanover. Look at that. Three lows. Who cares? That's a great looking chart there. Man, those 52 puts got my name written all over it. Look at that. Three lows, 51, 89, 91, and 97.
Puts on the
Closed, yeah, closed right. I mean, they're probably only like, what, 40, 50 cents, one day to go to expiration. But boy, there is a lot of air in that thing. And also just a huge move from 47 to 53. I mean, I could see this thing coming back and roosting in the $50 area. But as Dennis always says, support is support until it's taken out. So,
It is. And that's
yeah, I know, I
I
know.
try
You
to
keep.
anticipate the breakdown. I say wait a little bit until it actually is breaking down. Then maybe you wouldn't get caught on those Facebook comments.
Okay, that's enough on that. All right, we are going to take a quick break here, and then we're going to have a good interview here with Stephen Bigalow. So we'll be right back with you. Before we go on to our interview with Stephen Bigelow here, we're just going to have Jake do a quick rundown of some of the earnings reports.
Thanks, Joel. Just going to give you guys a quick rundown of what we've seen this morning so far. I'll also hit a couple of the retailers that reported after the close yesterday to make sure that you guys are ready to rock and roll for the market open. At the top of the list, we're seeing Target, Tango Golf, Tango reported EPS of 84 cents, which expected 63 cents, so a solid beat on the bottom line. The company did have a miss on the top line, though. 17.26 billion was expected, 17.37 billion. Some of the guidance was not impressing traders, though. They're also worried about how all the revenue seemed to be, or how all the profits seem to be coming from the United States. Company is still expecting to be on track for the number of Canadian store openings that it expected. So keep an eye on Target at the opening. I know the stock's been trading down a little bit on today's session. It is last trade I'm seeing is at 64.50, so it's off the lows. Lows we saw this morning were 63.40, closed yesterday around 66.50. So keep an eye on Target, Tango Golf, Tango at the open. We also had teen retailer Abercrombie and Fitch reporting this morning. Company reported EPS of minus 20 cents was expected 45 cents. A big miss there. Revenues came in at 1.03 billion versus expected 1.06 billion. That's Alpha November Foxtrot. We'll pull up the chart real quick there, guys, and see what we're looking at. But we did have a close yesterday of above 35 bucks. Looks like it was right around 35.06. And then it gapped up a little bit in the post-market trading. We saw a low this morning of 33.75. Last trade I'm seeing is at 34.08. So it looks like traders are trying to hang on to that $34 level. Keep an eye on this one at the open as well. We also saw GameStop come in this morning. So that's a big one going into the holiday season. Golf Mike Echo company reported EPS of 58 cents, which expected 57 cents. Revenues came in at 2.11 billion, which expected 1.98 billion. Keep an eye on that one at the open. Let's take a look at the chart real quick and give you guys a heads up. Company did close around, was it 52.51 yesterday, spiked up briefly in the pre-market when it reported it to 53.50, spiked lower to 49.55, below that key $50 level. So keep an eye on that one. I know Joel will be probably wanting to dive into that. Company trading most recently at 50.50 is what I'm seeing. Company did announce a $500 million buyback plan, but its guidance for the fiscal year 2013, it's moved the range from 3 to 320 down to 308 to 325. Analysts were looking for 325 per share, so moving its top end of the range to what analysts were looking for, and that did not impress traders. We also saw Sears Holdings reporting this morning. It's Sandy Hotel Lima Delta. Company reported an EPS loss of 503 versus expected loss of 313. Company also reported EPS of 8.3 billion, missing slightly the expectations for 8.39 billion. So that's Sandy Hotel Lima Delta, Sears Holdings there. Company is trading down slightly in the pre-market, but on very, very thin volume. We saw it tick as low as 58.87. Last trade I'm seeing is at 59.10. Closed yesterday in the high 61s. So keep an eye on Sears Holdings at the open. Very thinly traded right now. Expecting to see some movement once the market opens up. We also got some guidance this morning out of New Skin. It's one of the companies that kind of is embattled around in the Herbalife group. New Skin guides fiscal year 2014 EPS 725 to 750. Analysts were looking for 681 for that same period. It's also guiding sales for the fiscal year of 2014 3.9 billion to 4 billion. Analysts were looking for 3.59 billion. That has traders getting kind of excited over the stock. We had a close yesterday of about 114, I want to say 62 there. Highest this morning. Highest trade this morning was 122.71. Last trade we're seeing is 120.53. Fairly thinly traded right now. It is kind of battling over that $120 level, so keep an eye out on that one. New Skin definitely going to be getting some attention on the market move here today. We also got some earnings this morning from the Buckle. It's Bravo, Kappa, Echo. Our EPS came in at 85 cents versus a 90-cent estimate. Revenues come in at 286.8 million versus expected 291.14 million. Company is very thinly traded yesterday. We haven't seen any trades in the pre-market yet, so keep an eye on that one at the open as well. Dollar Tree, one of the dollar retailers, also reported this morning. That's Delta Tango Romeo. Company reported EPS of 58 cents, which expected 60 cents, with revenues coming in at 1.88 billion versus expected 1.91 billion. Seeing a tick down in shares this morning. Saw a high of 61.29 and a low of 55.05. Last trade I'm seeing is at 55.25. Keep an eye on the whole dollar store sector there in general, as they tend to trade together pretty closely. We also had Gildan Activewear, that's Golf India Lima, report this morning. Company brought in an EPS of 83 cents with 84-cent estimates. Revenues coming in at 626.2 million. It's expected 604.71 million. Shares are trading very thinly this morning. We saw one tick to 53.52, one down as low as 47.15, which seems to be the last trade right now. Yesterday's close is at 49, about 49 bucks flat. So keep an eye on that one at the open as well. So fairly thinly traded currently. Also going to hop over to some of the earnings we had after the close yesterday to make sure that we get you guys caught up there. Green Mountain Coffee Roasters is one of the major companies that reported yesterday. The Momo name did come out. That's Golf Mike Charlie Romeo. EPS came in at 89 cents, which expected 79 cents. Revenues came in at 1.05 million or billion versus expected 966.27 million. What traders are paying attention to here, though, is Green Mountain's guidance. Company did come out with a couple of numbers there. Expecting fiscal year 2014 sales growth in high single digits, while expecting a double-digit annual long-term sales growth. So keep an eye on Green Mountain. Shares are actually up a little bit this morning. We saw a spike as high as 68.75 after the close yesterday and a low of 58.39. Last trade I'm seeing is at 65.66 as it's been slowly melting up this morning. Yesterday's close is around 61.62. So keep an eye on Green Mountain Coffee Roasters this morning, especially at the open.
Hey Jake, let me break in with a bit of news here. Watching shares of GM, I got it up about $1 here. U.S. Treasury announcing that it plans to sell its remaining 31.1 million shares in GM. I see a close of on GM under 37.75 yesterday. Stock is trading over $39 at last check. That is ticker Golf Mike.
Heading towards that key $40 level as far as psychology goes. So keep an eye on that at the open. Let's see what some of the other automakers are doing
So,
on that news.
so the government's selling and it's going up. I mean, what do they think? The government doesn't know what they're doing and they're taking the other side of the government trade. That's kind of what do you guys think about that? Everyone, then now that it's not going to be government motors anymore, people are going to be, are they going to be happy with that? Where's your come on? Where's your
I mean, it might be just like a no more overhang kind of thing. Maybe this was a thesis by a lot of fund managers that as long as the government is in GM, they don't want to be involved in it. That could be a play here where it's kind of just like, all right, that cloud has passed.
hey,
Keep in mind, I mean, if the government's actually going to be selling off their shares, then they have enough confidence in the company that they think it can stand up on its own. So maybe it's a vote of confidence in the company that the federal government's hopping out.
Good analysis there, boys. I'll just alert our traders here to the I believe it's the all-time high on the reissuance of the stock here was 39.48. So we will keep an eye on that level. That's the highest it's traded since it re-IPO'd. Looking at the pre-market trading, you have not been able to hit that level. You got the immediate spike up to 39.10. So if you've been holding on to this thing the whole time, and I know Mr. Buffett was loading up on this at like 21, 22, 23. Maybe he's using this 39.48 as a potential exit point. We do have an interview coming up with Stephen Bigalow here. So Jake, thanks for getting us up on the news and the earnings here. We're going to take another real quick break and get Stephen Bigalow on the line. Welcome back, traders. Joel Alconin here with a very special guest, Stephen Bigalow of the Candlestick Forum. Stephen, how you doing today?
Doing good. How are you?
We're doing good here in Benzinga land here on Thursday. MarketFi event yesterday. I hear you were one of the keynote presenters. How did that go?
It apparently went well. We got a lot of response from it, but we hope to get a lot of response because when we present candlestick signals, it's just a very simple concept, very common sense put into a graphic depiction.
Okay. Just real quick before we delve into the candlesticks, could you just give us your education and your market background?
I graduated from Cornell University. Then I became a stockbroker for 8 years and got out of the business because I realized that brokerage firms don't have any more idea about what makes markets go up or down than anybody else does.
Okay, so you like to focus on candlestick charts and trading. Now, did you learn about it through books, or did you learn about it the old-fashioned way, just doing research on your own?
The old-fashioned way. I had learned candlesticks by accident. I'd gotten out of the brokerage business. I was buying houses in Atlanta, Georgia, renovating them and reselling them. And somebody dropped candlesticks on my desk one day and said, "Here, you were a stockbroker. Tell me what you think of this." And I thought anything as sophisticated sounding as candlesticks wasn't worth the time and effort. But he kept badgering me for about 3 months, and finally I picked it up and started looking at it and said, "Well, wait a minute, this makes a lot of sense." And the more I kept looking at it, the more sense it made. So I started investigating them. Now, this was back in the late 80s, early 90s, and there wasn't anybody using candlesticks or talking about candlesticks at that time. So I started researching it. There was some information that was coming back from Japan at that time. But the more I looked at it, as I say, the more sense it was making. And I started using it, fortunately, on the basis that I was probably one of the worst investors in the world. And when I started learning candlestick signals, I kept thinking, this makes sense. So if I could graphically see where I was doing everything wrong, then I could graphically see where I should start turning everything around 180 degrees, which I did, and I just started making money after that.
Okay, well, I'm kind of a bar chart guy. So what would you do to convince me that I should throw my bar charts out the window and start focusing on candlesticks? What would you do to convince me?
Well, the Japanese rice traders took very important elements about investor sentiment, which was instead of a bar chart, they would box in the open and the close, meaning if it closed above where it opened, it would create a white box. If it closed below where it opened, it would create a dark box. And they discovered over 400 years of research, not research, but actual use, that the combinations of different box formations would show that there's been a change of investor sentiment. So you get a heck of a lot more information in a candlestick chart than you do in a bar chart. Just the graphics of a dark candle versus a white candle, and then the different signals that are created by investor sentiment gives you a lot more information when there is a change of investor sentiment in a trend.
Okay, well, you're doing a good job because I definitely like to focus. I think the opening print, especially in New York stocks, where you have a large on-balance volume, is a good indicator. The opening, a lot of times you'll see is a high or a low in the day, and then the closes are also significant areas, as that's where traders and firms are marked on their positions, and whether it's good or bad, that's something that they use on their portfolios. So you're making some progress here on that, Stephen.
Okay.
And then you already went into like the investor psychology, how it creates a picture for you. But let's go back a little bit for like the novice investor. I mean, what are some of the easy things to look at to extract information from the signals? A couple of the basics of candlesticks.
Well, essentially, what you're seeing in candlestick charts is the graphic formation or the graphic depiction of investor sentiment. And through the years, I've discovered prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's exactly what candlestick signals are, is the graphic depiction of what's going on in investor sentiment. So whenever I get off track a little bit, I come back to one basic premise, and that is that the candlestick signals and patterns are the accumulative knowledge of everybody buying and selling during a specific time frame. So it's showing you immediately what's going on in investor sentiment. So as far as a beginning investor, I mean, we're always, I say everybody's always been told just buy good companies and hold them long term. You're going to come out well. Well, as we saw in 2008, that was not a good investment practice. What candlestick signals and patterns do is show you what's going on in investor sentiment right now. And if you can use that with other indicators, such as moving averages, trend lines, Fibonacci numbers, anything that everybody else is watching, the candlestick signals tell you exactly what's going on right at those specific levels and the different signals. As I started learning candlesticks, there's about 50 or 60 signals that you can learn. And when I kept asking people in the early stages, why isn't everybody using candlesticks? They make so much sense. The answers that came back were there are too many of them and they don't always work. Well, as I went through the research, I discovered there are too many of them. There's only about 12 major signals that you want to learn. And once you learn what they look like and the psychology behind creating those signals, you pretty much have a mental grasp of what's going on in market trends like you would as a 40-year investment or with 40 years of investment experience. So I also kept coming back to the premise that if it didn't work, we wouldn't be looking at them 400 years later. The family that developed the signals didn't become wealthy in Japan. They became legendarily wealthy. They were the powerhouse for centuries because they made fortunes trading the most basic of all commodities, which was rice. So essentially what they have proven or kind of illustrated was, again, prices do not move based upon fundamentals. Prices move based upon what investors think those fundamentals are going to result as.
Okay, in your second book, you combine candlestick analysis with, you call it effective Western technical analysis. Could you just give us a brief description of Western technical analysis and how you integrate it with candlesticks?
Oh, you've got all your basics of prices move essentially in waves. I mean, that's kind of proven, and that's human nature. If a price goes up too quickly, you're going to have profit taking. Well, what you have as far as the visual elements built into candlestick signals is that you can see what the nature of investor sentiment is. If you have a strong price move and it reverses, now you want to see whether that was a true reversal or whether that's just a profit-taking pullback. And because of some of the characteristics that are built into candlestick signals, such as the doji, which is where they open and close the trading about the same level each day, which essentially means there's indecision between the bulls and the bears. So if you see a pullback that has a few dojis in it, it basically tells you there is indecision on that pullback and they aren't really selling it off. So you can get ready for a pattern, which we call the J-hook pattern, which is just a simple wave one, wave two, wave three pattern that if you take profits after that first price move, instead of giving up on that trade, you just wait to see whether it's going to go into the next wave after the pullback. And wave three of a J-hook pattern is usually equivalent to wave one of that pattern. There's also what we have is a fry pan bottom, which is a big, slow rounding bottom curve that you couldn't trade if you wanted to, but the candlestick signals show you where the entry point becomes to get into that trade on a breakout situation. And that's what usually is the result of a big fry pan bottom, is a very strong price move that breaks out through the other end. The nice thing about the graphics of candlestick signals is that it builds in all the perceptions or all the indications of what most investors do, which is most investors buy exuberantly at the top and they panic sell at the bottom. And so when you're looking for the old adage, where do you grab for the fallen knife? Candlestick signals basically tell you where the selling has stopped and the buyers are stepping back in.
Okay, so that's how you eliminate the emotion in the trading. And you're talking about a lot of terms that maybe our traders or investors are not familiar with. Can we just go through a couple stocks here that are on your radar, perhaps for potential entries in the market, and on what the potential setup is, and what you're looking at, and what would need you what would be your next move? So if you got something that is kind of on your radar here, I can throw a chart up, and then we can kind of walk through. You can think your analysis out loud for us.
Okay, there's one specifically that we're investing, which is kind of an obscure one right now, but the symbol is OXBT, and that's Oxygen Biotherapeutics.
I
But
got you. Okay.
all right, that stock has recently started from about October 28th on what we call a little kicker signal, which means there was a dark candle. Then the next day they opened above the open of the previous day and went the opposite direction, which created a very strong price move. Went from like 7 3/4, or I'm sorry, 1 3/4, or $1.75 up to 9.50 over a 5-day period. Then for the next 2 weeks, it has just slowly pulled back indecisively until it's hit the 20-day moving average. And yesterday, it created a bullish engulfing signal, which is one of the 12 major signals. So now we're buying on positive trading today because that's essentially setting up a J-hook pattern, which means if we're buying today, our anticipated target is the same price move as we saw in wave one, which means this one could move up into the $14, $15 area fairly soon. So that's essentially what we're trying to do, is find the patterns that are created in investor sentiment, or time and time again. Prices or investor sentiment works the same way 400 years ago, and it's going to work the same way 400 years from now. Prices are all based on the effect of human emotions and basically the fear and greed factor.
Okay. Was there some news? I mean, here you got a Putic stock here, so obviously there had to have been some fundamental news. An FDA approval, or was it something like that caused that spike?
Apparently, but that's what we don't have to be concerned
Okay.
about
Good.
in candlesticks. Is we don't need to know what the background is or why a price is moving. All we have to do is analyze that the price is getting bullish or bearish sentiment coming into it. So there's a lot of times where a pattern will set up a reoccurring pattern that we can identify, like a fry pan bottom or a cradle pattern, which is a big down day and then 4 or 5 flat doji days, followed by a big bullish day. We don't have to know why that has reversed. We just know it's reversed. So again, going back to the basic statement that the candlestick signals are the accumulative knowledge of everybody buying and selling during a particular time frame. All we have to see is that somebody's made decisions that they want to be buying and creating that same pattern that has occurred hundreds of millions of times in the past. And so we're just buying based upon what everybody else's knowledge is telling us that price movement is going to do.
Yeah, a couple things of note here using my rudimentary form of technical analysis. I mean, you had the move up from 2 to 11, $9 move. You pulled back over 50% here. Does it have any significance to you that it filled the gap from when it was trading on November 4th? It had a gap up and it's come down and filled the gap. Does that have any significance to your trading?
It doesn't have primary significance, but it has additional credence of why the buying is going on at that particular level. So we're seeing a bullish engulfing signal right at the place where it's filled the gap. Also, it's bounced off the 20-day moving average. But we have one technical indicator that is extremely accurate, which we call the T line, which is the 8 exponential moving average. And there's a very simple analysis of that, which is if you see a candlestick buy signal and a close above the T line, you're in an uptrend until you see a candlestick sell signal and a close back below the T line. So it's I know a lot of people don't use the 8 exponential moving average. So we put it on the same basis as a oh mercy. Oh, I'm sorry. I've got new phone systems here, and I don't know how to shut it off.
Don't worry about it. Just pick it up and throw it against the wall.
Okay.
Uh, okay. You got something here on the upside. I mean, you'll short stocks as easy as you buy stocks, correct?
Exactly.
Okay.
Again, coming back to the same premise. Oh, mercy. Mercy.
That's okay. Don't worry about it. We usually see
Okay.
the technical and computer problems we have here, so don't worry about it. Could you give us an example of something on the upside? Where you're getting a potential short signal.
Yes, there is right now we're going short in a stock, QLIK. And it has dropped dramatically from the $33 range down into the $26, $27 range. But it over the last 4 weeks, it has done what we call a dumpling top, which is the opposite of the fry pan bottom. A very slow rounding curve, and now it's breaking to the downside. And so that tells us that this is a bearish J-hook pattern, that the next downside move could be the same movement as we saw. So now, yesterday, it did a doji, and a doji again is a day where where it traded, but it opened and closed almost at the same level, meaning there's indecision between the bulls and the bears. This makes it very simple. If it opens lower today, that tells us the bears have won, and if you'll note on your chart, there was a big candle the day before the doji, and if it opens lower today, we have what we call a doji sandwich, which means that big down day and then the doji. Then if it opens lower today, there's a very simple rule of a doji. It's usually going to move in the direction of how they open it after a doji, and usually that price move will be equivalent to the same move that was prior to the doji. So that's what we call a doji sandwich, which means that becomes a very high probability trade that it's going to go down the same magnitude it went down the day before the doji, which means we're shorting it on a lower open with a high probability that it's going to have a down day the same magnitude as the previous day. And the chart pattern being a bearish J-hook means there's probably another 4 or 5 points to the downside. So essentially, the price moves and patterns that are easily identified using candlestick signals at least put you in a situation where the probabilities are pretty high that you're going to be in the right direction at the right time, whether you're going long or going short.
Okay, well, thank you for those explanations of candlestick charting. You definitely have won over a fan here in me. I'll have to break out my books again in technical analysis and take a look at it. Thank you very much for coming on, and we'll certainly follow these two stocks over the next couple weeks or so and see if the moves come to fruition. I sure hope they do for you. But thanks again for coming on, and we'd like to do it again.
All right, great. Thanks for having me.
Okay, we're going to get some quick headlines out of Mighty Joe Young here before the open.
Well, sounds pretty good to me. A special thank you to Stephen Bigalow for coming on the show today. Stephen presented at the MarketFi Holiday Trading Summit last night, covering early warning signals for reversal alerts. And don't forget, you can sign up and catch the second part of the Holiday Trading Summit today, which starts at 4:30 Eastern Standard Time. So with that, moving into today's headlines, Fiat's Chinese joint venture is planning to effectively double daily production at its plant in southern China, an executive said, in a sign of positive view toward the market. John Burton, general manager of GAC Fiat Automobiles, said it would add a second shift at its plant in the city of Changsha starting in April 2014. Currently, the plant only has one 8-hour shift producing 32 cars per hour. Retailers that have endured a prolonged slump in video gaming sales are banking that Sony's PlayStation 4 and Xbox One will brighten a tough Christmas shopping season. It has been 7 years since the last successful video game console release, and retailers have suffered in the interim. From 2008 to 2012, annual sales in the U.S. gaming market fell 38% to $13.2 billion, according to Paul Raines, chief executive of GameStop. Mr. Raines is now expecting that the drop in the last 9 quarters to change thanks to the new consoles just released. It's refreshing to get back into the growth business in the top line. We are pleased to have the last console cycle behind us. Speaking of gaming, the NCAA is suing Electronic Arts and a licensing rights firm, claiming they breached contractual and fiduciary duties when acting as its business partners in producing popular college sports video games that have since landed all three parties in court. Collegiate Licensing Company, which manages licensing rights for dozens of prominent universities and the NCAA, failed to adequately supervise the video game maker, EA Sports, according to a November 4th filing in the Superior Court of Fulton County. That lack of supervision subjects the NCAA to potential liability in several lawsuits currently being litigated relating to EA's alleged use of NCAA student athletes' names, images, and likenesses in EA's NCAA-themed video games. Tesla Motors has won a near-perfect score, 99 out of 100, and the highest in years for its Model S electric car in an annual owner satisfaction survey conducted by the publication released today. The results offer a rare piece of good news for Tesla, which has faced increasingly tough questions after 3 cars caught fire in less than 2 months. This week, U.S. regulators launched a safety probe into the Model S. The survey was conducted earlier in the spring. Southwest Airlines is taking its offering a bit further. The airline announced Wednesday that its passengers will have the option of connecting to the aircraft's wireless internet service from the time they board the aircraft to the time they leave, including layovers. Southwest said its extended offering is possible because it uses a satellite-based system from Global Eagle Entertainment, subsidiary Row 44. Ashton Kutcher and Walmart got into a mini Twitter war yesterday. Kutcher tweeted about the Ohio Walmart charity collection, writing, "Walmart is your profit margin so important you can't pay your employees enough to be above the poverty line." The company's at Walmart newsroom account then exchanged several tweets back and forth with the actor, and concluding with, "We know we can always get better as a company. This year we've made providing more opportunities for our associates a top priority." Ally Financial said Wednesday it repaid taxpayers another $5.93 billion from its government bailout and sold $1.3 billion in stock through a private placement as part of its capital plan approved last week. The Detroit-based company has now repaid $12.3 billion of the $17.2 billion it received in 3 separate bailouts in 2008 and 2009. Completion of these transactions marks key milestones for Ally, said CEO Michael Carpenter. With the $5.9 billion payment, Ally has returned more than 70% of the investment to the U.S. taxpayer, as well as achieved a more normalized capital structure. Shareholders are putting AT&T and Verizon Wireless on notice to tell the public more about the company's role in government surveillance efforts or risk a ding to the bottom line. 2 separate but similar shareholder resolutions from New York State's comptroller and large investment firm say the 2 dominant wireless carriers hurt customers' trust by not disclosing more about the data they share with governments. The resolutions are the latest sign that the flurry of revelations about American spying efforts is putting business pressure on the companies lassoed into providing customer data to the government. If a customer is concerned about their privacy perhaps being compromised, they should switch to another service, said Thomas P. DiNapoli, New York's comptroller, the trustee of the $160.7 billion New York State Common Retirement Fund. He filed a resolution with AT&T this month demanding that the carrier publish reports on the information it collects and shares. The New York Times today launched on Google Play Newsstand, Google's newsreader app for Android phones and tablets offering newspapers, magazines, blogs, and other sites. Users of Newsstand will have access to the New York Times, designed and formatted for optimal reading on Android tablets and phones. The Times on Google Play Newsstand is an extension of the New York Times Everywhere strategy, which is designed to expand the Times' reach into users on third-party platforms. The launch also demonstrates the Times' commitment to Android, where users can already access Times content via its Android app, Flipboard for Android and the web. Today's trivia tidbit. On this day in 1980, 350 million people around the world tuned into television's popular primetime drama Dallas to find out who shot J.R. Ewing, the character fans love to hate. J.R. had been shot on the on-season ending episode the previous March on the 21st, which now stands as one of television's most famous cliffhangers. Plot twist inspired widespread media coverage and left America wondering who shot JR for the next 8 months. Joel, you probably tuned in for that one, didn't you?
This is how old I am. We used to have when I was back in college is when this was, right? And we used to have like Dallas parties who did shoot? Was it Lucy or who shot Jr.
I wasn't there, so I'm not really sure. I assumed that you watched the episode and you would remember because it had such a significant impact in pop culture.
But that was when I was back in college. How am I supposed to remember that?
That's right. Yeah. Once you lose those brain cells, you can't get them back. But I'm going to have my man Shubs over here figure out who shot JR just so we can relive that moment with everyone.
No, I don't want to know. It's like a spoiler. I'm going to watch that episode.
All right, Dallas is probably available on Netflix or something like that. You can certainly watch it. And with that, we have the market open, who's taking us through the first few minutes of trading.
Ding, 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 ding.
Sounds like Brent's picking it up.
Brent, you got any?
I was just dinging. I was just the bell. It wasn't Brent. It was the opening bell.
Okay, all right, and we're off to the races here. Let's start with Green Mountain Coffee, and I thought I saw a seller at 68. Well, he turned into a buyer, and now we are coming up on the pre-market high. Pre-market high right now, Green Mountain Coffee, 68.75, folks. So keep an eye on that level. That's the only thing you have in the books here. A couple stocks that were heading south in the pre-market due to some disappointing earnings. Let's take it the French retailer Target. That stock disappointing earnings. Got to 63.60 in the pre-market, $64 level, 64.07 the low. So we'll be keeping an eye on the pre-market low at 63.40 in Target. Another retailer that's taking a hit, but still trading above the pre-market low is Abercrombie and Fitch. 33.75 pre-market low. Got down there on a couple occasions, but the $34 level being defended here early in the session. A couple other stocks that we talked about on the show. People are happy that it's not going to be Government Motors anymore. They're selling their stake. People are fading the government here. GM sprinted over the $39 level in the pre-market. Let's get that pre-market high for you. Got over 39, I believe 39.10.
That's what I see.
Yep, pre-market high, bumping up 38.90 high in the session. We'll be keeping on that eye on the pre-market high, 39.10, and then I believe the all-time high since the re-IPO of General Motors is 39.48. Moving on to some other issues that we covered here in the show this morning. GameStop, disappointing earnings. The stock was selling off in the pre-market. Now through that critical $50 level we had identified as support. Looking at the pre-market low, we are through the pre-market low here. Pre-market low was 49.55. We've gotten to 49.20. So GameStop here, it's not stopped going down. Let's take a look longer term here. You did have some lows in GameStop at 48.51. That's another buck away from here. That was back in October. If there's any issues of interest that you guys are trading, please give us a heads up here. We'll try and look at the chart before the show closes out. Taking a look at some other issues that we covered. Here's an interesting one. New Skin. New Skin made a new all-time high in the pre-market. New Skin got over the $122 level in the pre-market. Actually got up to 122.71 here, but in the regular session has not been able to even reach the former all-time high in the issue. Multiple tops at the 120.82 area. So a little overdone here. New Skin pre-market pulling back a bit. 117, a buck and a half away from there. Would get down 116.82 would fill the gap from yesterday's trading.
A couple of execs are currently hosting the Investor Day webcast out of New Skin, so you should expect that one to be pretty volatile here. I'm seeing a few comments coming out of there. I think the CFO gave some Q1 sales guidance in the range of 850 to 870 million. The estimate that I see is for 670 million for the company's Q1 2014. Not sure if that's comparable. Stock doesn't really look like it's reacting to the upside following that headline, but continue watching this one. You will definitely see some volatility here.
Shares of Facebook here trading up in the session. Stock held up very well during yesterday's sell-off. Yesterday's high 47.55. We've stopped at 47.46. So call that 47.50 area resistance in shares of Facebook. Let's take a look. Chelsea was asking about Tesla here. If the stock had put in a bottom, multiple lows around the $119 area, trading up in the pre-market here, 121.82 low, 123.22 high. Really no resistance here until you get up yesterday's high, 127.45 and 129. So potential resistance areas for Tesla shares. And I think there's a little bit of good news out of that company today, so perhaps that's contributing to its rise today. Only one of the stocks in the Big Ten here, the Big Ten components of the S&P trading slightly negative here, is shares of General Electric. Stock we haven't talked a lot about, getting multiple lows around the 26.88 to 92 area, just kind of hanging out there right now. So see if the momentum in the market can pull G back up into the 27 level. Twitter, no love for Twitter today. I don't even think we talked about it on the show, did we?
I don't think so. I
Yeah.
was totally saddened and disappointed.
Okay, we'll have to tweet it out that we didn't talk about Twitter. Interesting here, hit 40 a couple days ago, hit 40.51 in yesterday's trading. We are at 40.60 here, so it looks like you're starting to get some support here in the 40 handle. Like I said, 40.51 was your low on yesterday, and then the low at 40 even. So Twitter trying to put a little bit of a bottom in here, and no downgrades today, so that didn't hurt the stock. Another new all-time high for shares of Johnson & Johnson, taking out the former high at 95.47, getting to 95.75. Perhaps won't find any resistance there until you get up to the next institutional level of 96. Perhaps you have some orders there. We just have to touch on Muddy Waters' favorite target here. NQ Mobile's kind of been out of the news a little bit, but finding resistance here at yesterday's high was 14.41. You did get to 14.51, and then you had a pretty good sell-off. So if you're trying to scalp that stock there and you took 10 cents a heat shorting it at yesterday's high, you got a good trade going. 1375 yesterday's low. Haven't been able to get to it yet, so maybe getting a couple days of quite tight ranges consolidation here and NQ Mobile before its next big move. Taking a look here at some other stocks, we didn't really touch a lot on the financials today. Wells Fargo has quietly snuck up to the $44 level. 44.07 was yesterday's high. Haven't quite been able to reach that. 44 maybe be drawing some institutional selling interest here over the next few days. S&P's coming off a little bit, 86.75. I mean, really no relevant number up there to lean on. Tuesday's close at 85 and a quarter. So just kind of got a slow morning roll up here in the S&Ps. Let's check a couple commodities out here. We're talking about the consolidation and a series of lows in the crude in the lower 93 handle, and you're getting a little bit of a bounce off there. Still looking at the major resistance at multiple highs between 95.08 and 95.20. We've only gotten to 94.72 in today's trading, and now pulling back a little bit. So pretty well-defined support and resistance in the crude market. Moving on to the gold futures. Gold, oh boy, continues lower. Interesting, we are trading right at yesterday's low, 1240.20. Did dip below that at 1270 or 1237.50. Not a lot of support here in gold. I think I was looking at the chart last night, and you really got to go down into the lower 12s. I believe 1212 to find support in gold here, but still trying to get back above yesterday's low, 1240.20. Taking a look at other issues of interest here, that support there, General Electric is giving away here down 8 cents. Procter & Gamble getting a little bit red here too, but as far as that, the major stocks in the index are still holding up pretty well. Let's take a look and see what kind of follow through we've got here in the General Motors. 39 institutional selling there at 39, a little bit too much here for GM. 39.10 pre-market high. Probably had a little bit of the stock in the book there at 39, so that's kept a lid on it. We are trading. We got below the two former double tops at 38.71 and 74. Went to 63. So, in order to make a run back up at this $39 level, I'd like to really see GE, hold this level right here, 38.72, 38.73. Facebook missed yesterday's high by 9 cents, now falling back down to the $47 level. Got to imagine if in fact it gets down under 47, buyers probably be stepping up from the close from yesterday. Really no major news on that stock to speak of today. Moving on, what else did we cover today, Brent? You got any news here?
One thing I don't think we covered was some news in Aeropostale. Do you remember talking about that one?
Let me guess. It's down $1.
Why did you think $1?
I don't know. It just seems like
Just throwing it out there.
I don't know. Let's see. I'm probably wrong here.
I mean, it's kind of funny because a lot of these retailers have been dealing with earnings. We've been getting just a ton of earnings in from guys and gals in this sector. And this morning, Aeropostale moving on not earnings. I'm seeing Crescendo Partners send a letter to the Aeropostale board saying that they believe there's significant opportunity for the company to reduce costs. Crescendo is urging a special committee to be formed in order to consider such items as a possible sale. In that release, Crescendo saying that it sees an implied price of $14 to $16 per share for Aeropostale shares. The stock did spike to, what do we got, 10.56 in pre-market trade. It's kind of coming back down, but it's really volatile this morning. It opened under 1030, spiked up to 1050. Now it's around 1035. What kind of technicals are we looking at in Aeropostale? And Joel, I mean, when you get some kind of M&A chatter like this, are the technicals out the window in this? How does that work?
I mean, you never want to fade, a takeover or a reorganization or something like that. So, you're not going to make a lot of money doing that. It did hit an interesting level here. I finally figured out the symbol. I always do AEO, but we got to 10. Let's look at it first in the pre-market. Pre-market, you got over the 1050 level. You got to 1056. In the regular session, though, you've only got to 1049, getting a little pullback here. And that level coincides with the 1047 high that you had on September 17th. So Harris Postel running in a little resistance here, confirmed by the pre-market trading, the regular trading, and also going back to September 17th. Just wanted to just take one look here at the Target once again. Just we talk about the significance of the pre-market highs and lows here. You did had a 63.40 low in the pre-market, but that area is attracting some buying interest again today, as if we made a low at 63.57 during the regular session.
I always like to try to conclude the show with a bit of a preview for everyone out there. Just a heads up as to what you should be looking out for. We do have the Philly Fed Index that's going to be coming out in about 15 minutes at 10 a.m. Eastern. Tomorrow we will get JOLTS job openings and also the Kansas City Fed Manufacturing Index. Tonight after the close, we're going to get earnings out of Pandora, out of Marvell, Intuit, Gap, Aruba Networks, and also Autodesk. And then tomorrow morning, holy cow, it's Friday already, isn't it? Almost Friday morning, we're getting earnings out of Ann. And of course, I'm gonna plug the Holiday Trading Summit that's hosted by MarketFi. Today is the second of 2 days. It spans from 4:30 to 7:45. We're gonna have speaking tonight will be Bob Byrne and Tim Collins, also Sanglucci, and concluding the summit will be Hubert Centers. I believe Joe dropped a link in to go sign up for that a little bit earlier. I'll drop a link in, or I'll have Jake do it really
I
quickly.
sure did.
Oh, hey, thanks, Joe. I don't see it popping up there. But you guys get the idea. We had a great turnout last night. I think
Oh,
you guys are gonna.
it moved
what?
up a little bit. I posted it at 9:23.
9:23. So just scroll up a little bit to see the link for that. We went a little bit over today. It's 9:46, Joel. We're gonna get in trouble, I think.
Okay, we're going to end it for today, and we'll be back with you tomorrow.